JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of June 2020. So yep, welcome everyone. Welcome to this Wednesday's morning live session where we're going to have a quick look at the markets, a few of the charts that we looked at yesterday, some new ones of course as well. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So it'll take you to this page, which as I said, that which has mentioned that we update on a daily basis. So yep, I believe you can find something useful. Now then, quick update on what's happening here. So as we know, the total amount of infections and deaths has surged again. So yep, that kind of made investors a little bit on worrying, left them worrying a little bit. So of course you can see that the figure continues to rise. Different sources provide different, in a way, figures, to be honest. I mean, other sources show that it's already above 8,200,000. so here on this one here, it's still around this 8,173,000. So but yep, of course the fact stays the fact that the problem still persists, and yep, hopefully we can one day see an end to all this. Now, jumping into the charts very quickly. So as you can see, I want to start off with Nikkei. Now, the Japanese index had a nice run to the upside yesterday. It managed to close above this barrier, above the 22,400 zone, but today it failed to move above yesterday's high, and it kind of drifted even at one point back below this 22,400 zone. However, as you can see, the index still kind of is just let me double check. I think it closed already. So so yeah, it basically is trading right now below the just one moment, bear with me one moment, guys. Sorry, it closed already. I do apologize for that, guys. So got confused here. So the index closed already, managed to close above the 22,400 zone, which could still be seen as a positive. However, the fact that it failed to kind of move above yesterday's high, that kind of makes us a little bit worried. So for now, we'll probably be very careful. We'll continue monitoring these short-term tentative upside lines, one of which is taken from the low the 3rd of April, and the other one is taken from the low the 19th of March. And in a way, as long as it kind of stays above these two lines, then maybe there could still be some positivity left in this index, and this could travel higher. So that's why for now, yes, the fact that it still managed to close above the 22,400 zone, yes, keeps us on the positive side. However, like I said, we'll be very careful due to the fact that the coronavirus cases kind of have risen again. So we'll see how the European markets will react, and how the US equities will react today as well. So we'll keep an eye on that. For now, basically the same levels remain on this index. In order to aim for lower levels here, we would still need to wait until we would see a drop below the 21,400 zone, and only then we could consider the downside, because at the same time the price would be placed below the 200-day EMA and maybe more sellers could be joining in. In terms of the upside, yes, again, like I said, we are still leaning a little bit more to the upside because the price remains above the 22,400 zone. However, we want to be a little bit on the careful side. Now the German DAX, the index managed to close nicely above the highest point of March, near the 12,273 territory. But yep, again the same story here with all these indices. If we look at the cash index right now, yes, we can see that the index is still balancing above the 12,273 territory, so the cash index is still balancing above that area. However, like I said, let's be on the careful side. For those who are more on the cautious side, you could wait for a push above the 12,886, maybe 87 zone. However, I do understand it's quite a big of a move here to miss out, but basically, for now, for looking at this picture, yes, we are leaning a little bit more to the upside on this one. We could drag this index maybe all the way here towards this 12,887 zone, and then we would take it from there. But at the same time, again, like I said, be very careful, guys. If by any chance this starts dropping back below the 12,273 territory and falls below the low of yesterday, and let me just quickly put this one on the chart, and let me probably recycle one of these lines. If the index drops back below this little territory, the 12,133 zone, which is marked by the low of yesterday, then maybe we could go for a bit of a larger correction to the downside towards this upside support line taken from the low of the 19th of March. So that's why, guys, at this point, yes, basically, long story short on all this, yes, we are leaning a little bit more to the upside here, because we are still kind of balancing above this 12,273 territory, which is the highest point of March. The fact that the index closed yesterday above it, that of course also strengthens the idea of the upside. The fact that the cash index is currently balancing above that area as well. So yep, all this kind of creates this a slightly more positive atmosphere. However, we're still very close to this level, so let's see if the index can push further north, and if it doesn't fail somewhere around here, somewhere near one of these levels, near like the 12,671 zone, which previously was seen as a good area of support. Now it could be taken as a good area of resistance. But again, for now, the only kind of thing that you could do here is remain careful. If you are if you are long here, then yes, have probably a tight stop loss. Gold is still at a very interesting spot. So yesterday the commodity managed to remain above this 1723 territory, the one that I talked about previously, and it continues to trade as well, continues to trade above its 21-day EMA, which also could be seen as a positive. However, as I mentioned before, in order to get comfortable with higher levels, we would prefer to wait for a push above the upper side of this range where the precious metal is currently stuck in, and that's roughly between the 1670 zone on the downside and the 1748 on the upside. So that's why wait for a clear break above the upper bound of this range before considering higher levels. And in terms of the downside, as I mentioned before, basically we don't want to get a similar scenario which we had on Monday here, where the commodity drifted below this area, below the 1723, below the 21-day EMA, and below, at one point it dropped below this key important area near the 1708 zone, and it seemed that it could drift further south. However, it ended the day, the bulls managed to push this one back up here and end the day above the 1723 territory. So In other words, we would like to see this commodity dropping heavily below the 1708 zone, which is roughly around the midpoint of this range, and then we could consider a possible move towards the lower side of this pattern. Until then, even if it drops a little bit lower here, still this could be a bit of a neutral one for us. Now then, Bitcoin Cash, I'm not going to spend too much time on this one, but basically just wanted to quickly update you on this. And from all the cryptos, this one is the flattest, I would say, even. Maybe Ripple is also close to that, but Bitcoin Cash here, as you can see, continues to move sideways within the range. And yep, for now guys, what we're gonna do here is we're also gonna wait. Now of course we could start drawing some sort of lines here, like maybe a downside line here, capturing some of these highs, and or we could draw an upside support line, capturing some of these lows. This way basically kind of forming a possible symmetrical triangle here. Now again, this is still tentative. Even if we get a nice violation of one of these lines, yes, let's say if it breaks the upper side of this so-called triangle, if it breaks the upper side, still it could kind of end up testing this area, the 280.50 zone, which if provides decent resistance, could force the price to slide again. So that's why basically we won't do anything until we get a violation of one of these highlighted areas, either a drop below the or either a push above the 280.50 zone here in order to aim for higher levels, or in terms of the downside, you could, yes, of course, keep your eyes on this level here, the 204 zone, but in a way you could start looking at some lower levels if we get a drop below the 224 territory here, and then you could aim for this area. But again, that's still, as I said, this could act as this level here, the 204 zone, could act as a very nice area of support. Now then, jumping into a few pairs, AUD USD, quick update here. So this idea still is working out nicely. So where I was talking about that the pair may drift lower and could test this upside support line taken from the low of the 19th of March, which if provides support again could push the rate higher. So we did have something like that. We did have a move higher, and but as you can see, yesterday the pair failed to remain above this barrier, the one that I was talking about, the 0.6934 zone. I talked about this one previously. That's by the way the high of the 16th of January, and we had a nice push yesterday above it, but as you can see, the bears quickly took control and pushed the rate lower. However, it still remained above this upside line, and today we're seeing still the pair balancing above this upside line. So long story short, guys, keep your eyes on this 0.6934 mark, because as you can see, it continues to provide decent resistance, and if we do get a nice daily close above this, then yes, we'll aim for some higher levels. If this pair by any chance starts dropping below this upside line and closes the daily candle below it, then well, it increases the chances of a further drift lower here. However, we still would have the 21-day EMA to overcome here, because as you can see, it acts as a very nice area of support here on Monday. So if it drops further down, then still the more comfortable level, after a break of which we could consider lower levels, would be this 0.6677 zone. Similar stories on the AUD/JPY. We need to see a nice good daily close above the 74.47 zone in order to aim for higher levels. Still the pair remains above this upside line, so yes, it kind of is still helping the bulls here. However, if this upside line breaks and the rate starts falling below the 71.92-93 zone here, then yes, further declines could be possible, and the rate would be placed below this 200-day EMA, which some sellers could see as a good opportunity to step in. USDCAD. Now here, I've talked about this one yesterday, and basically I was telling you guys to keep a close eye on this wonderful pattern that we've got here, and that's it could be a possible flag formation here. As you can see, we have a nice pole. The pair is drifting, has been drifting lower here, but very slowly, and still it remains above this barrier, this 1.3488 zone, which as you can see previously acted as a good area of resistance here on the 9th of June, but now it could be taking the role of support. However, if it gets broken, then yes, we will aim for lower levels, but as long as the rate remains above this area, there is still a chance for the buyers to step in, if they could step in here, we could see a nice pop higher, and the bullish flag pattern idea would work out very nicely. GBPJPY. Oh, and by the way, sorry, and quickly on USDCAD, if we could see this move higher, yes, the pair could travel further north here, however, only up until this downside line taken from the high of the 31st of March, because again, this move higher could still be seen as a temporary correction before another leg of selling. GBPJPY, this one is a tricky one, however, it's very it looks similar to GBPUSD, and basically like GBPUSD is also trading above this short-term tentative upside support line taken from below the 18th of March, and yesterday we saw the pair traveling higher, however moving above the 135.75 zone, but failing to stay here and even failing to reach the 200-day EMA, from which, as you can see, then the pair reversed to the downside, and for now we will be a little bit on the careful side. The idea that we're going to be considering here could be this one. Let me just quickly put this one on the chart. The idea could be this right here, where the pair might drift a little bit lower, test this upside support line, and if it holds, could rebound and push back to the upside. In terms of the downside here, larger extensions to the downside, then we would need to see, first of all, of course, a break of this upside support line, and then maybe a drop below this little area somewhere around here, not here, but right here, around 131.63 territory, and then yes, maybe lower levels could be met, but we'll reevaluate everything here again if we do see a drop to the downside here towards this upside support line. In terms of the upside, let's say if it doesn't fall lower and starts pushing higher, we would need to see at least a push back above the 200-day EMA here on the daily chart in order to aim for higher levels. And finally, EURUSD here. Now the idea that I've mentioned yesterday is kind of working out, to be honest, because as we can see, the pair has drifted lower, has sold off yesterday, remained again above this 1.1237 territory, which I talked about a lot in my previous videos, and now kind of we could be seeing a possible head and shoulders pattern here. But again, before kind of considering this idea, we would need to see a nice good violation of the so-called neckline, which is roughly around here near this 1.1237, and ideally we would actually like to see a daily close below this area and then aim for lower levels. This level, by the way, is marked by the high of the 16th of March, so in a way maybe more sellers could see this as a good opportunity to step in if we would get a nice daily close below this area. For now, we are probably going to be on the neutral side. Even with the upside, we need to see a push above this barrier, the 1.1384 zone, in order to aim for higher levels again. But for now, like I said, it is where it is. The pair is stuck here, so that's why don't rush into this yet. Wait for that confirmation break, and then and then kind of do something about it. Now then, also, by the way, just to kind of let you know that we did have some data coming out from UK right now while I was running this video. So we had some inflation figures, so you have to check out the economic calendar for that. Later on today, we do have the Eurozone inflation figures as well, so those could be quite interesting to watch, and maybe we could see a bit of activity on the euro after the release of that data. Also, something to monitor today will be the Canadian CPI figures, and of course crude oil inventories. But like I said, with the Canadian CPI figures, yep, keep your eyes on that USD-CAD pair. Could be quite interesting. So yep, let's see how all this is going to play out. And later on, of course, we do have the Fed Chair Powell testifying again, yep, let's see if I mean, probably no huge expectations there, but of course, let's see how the market will, if the market will react. So I hope you have found it useful, guys. Thank you very much for watching and listening. If you want to catch my video later on, my traders tea time, as always, 13:15 GMT. But for now, I hope you have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.